What would you say if I told you that the federal government's current plan to increase housing supply in this country, when I say housing supply, I'm talking about rental housing supply, is to give foreign owners a tax break? Now, consider this when we are leading up to the next federal government budget in the next 2 weeks, how much of these tax incentives are going to be reduced for Australian mum and dad owners. Now, this tax incentive was increased in the 2024 budget, and it is called BTR, Build to Rent. This is about increasing foreign ownership of rental properties in Australia, and it's based on a UK model that has destroyed that country. So let's talk about it. This is not clickbait, this is not scam, this is not fake news. Just Google BTR Build to Rent and you'll see what's happened in the UK, and you'll see articles on this from realestate.com.au, from the Treasury, because it's been part of our budget, and also on the ATO website. Now, what is this? So this is foreign owned properties. Now we're talking, I'm going to read this to you, at least 50 self-contained dwellings in one building or a group of buildings on the same or adjoining land. They must be owned by one entity or group structure. So I want you to think of something like Mirvac. We're talking about MITs, managed investment trusts. We're talking about super funds. And most of these are not Australian owned. Now, they must be made available to the general public for rent and retained as rentals for at least 15 years. But let's talk about these tax incentives. So the standard tax rate of 30% that these companies, foreign owned companies, will be paying Australia has been reduced as part of the budget in 2024 to 15%. That is shocking when you think about how much tax investors in Australia pay. Now, the capital works deduction, so investors can get this if they get a depreciation schedule. We can claim 2.5% over 40 years. Well, they get this at 4% over 25 years. They get 50% land tax concession in New South Wales, Queensland and Victoria. Now, what went wrong in the UK model? Well, the first thing that they did was actually changed and reduced the amount of tax concessions that English people, English investors could actually have. Sound familiar? And then in the UK, this became larger scale. At the moment, they're saying this is smaller scale in Australia. That's what happened there. BTR delivered lots of rentals, improved rental quality and stability, did not lower rents, reduced first home buyer access, shifted land and capital away from ownership, and created political backlash once the scale was visible. This is going to happen to this country in the next 10 years. Why are we copying this? Why are we taking away the tax incentives for Australian investors and giving it to foreign owned investors? Hit the follow button for more.